This is Trade Flow News, bringing you relevant news and insights from around the world. Trade Flow News, enabling trade for SMEs and economies worldwide.
These are some of the key topics that we will be looking into in today's program.
First, let's take a look at the overnight headlines which are impacting the commodity markets. OPEC expects a release of oil stocks by majors consumers to significantly increase a global glut in the next few months, an OPEC source said, just over a week before a meeting to decide immediate output policy. The outlook might complicate decision-making for the Organization of the Petroleum Exporting Countries and Allies, a grouping known as OPEC+, although several sources said there has been no discussion yet on pausing planned production increases. OPEC's Economic Commission Board, ECB, a panel of experts that advises ministers, met this week ahead of the OPEC Plus ministerial meeting on December 2.
Singapore residual fuel oil inventories jumped 7% in the week ended November 24, climbing to an 11-week high as net import volumes rose, official data showed on Thursday. Onshore fuel oil stocks rose by 1.55 million barrels, or about 244,000 tons, to 22.9 million barrels, or 3.61 million tons, Enterprise Singapore data showed. However, residual fuel stocks were 5% lower than a year earlier and below the 2021 weekly average of 22.7 million barrels. Weekly net imports, meanwhile, were up 16% from the previous week at a 4-week high of 678,000 tons, on par with the 2021 weekly average of 679,000 tons. Weekly figures, however, are volatile.
Moving on to the top news in the energy sector.
Japanese refiners are dusting off unused supply chains for fuel oil and getting coastal vessels and storage tanks ready after receiving requests from electric utilities to supply more fuel oil this winter amid a global crunch for power generation fuels. Japan narrowly averted blackouts last winter as liquefied natural gas, LNG, demand and prices soared during a cold snap, and the situation this year may get even tighter as strong use and restocking in Europe and Asia draws down supplies and props up prices near record highs, executives and analysts say. Highly polluting fuel oil, used mainly to power ships, is being considered as a backstop in case of gas shortages for the first time since the aftermath of the Fukushima disaster in 2011.
Oil prices steadied on Thursday, as investors eyed how major producers respond to the US-led emergency oil release designed to cool the market and with OPEC now expecting the release to swell inventories. Brent crude futures gained 7 cents to $82.32 a barrel at 11:27 GMT. US West Texas Intermediate, WTI, crude futures fell 12 cents, or 0.2%, to $78.27 a barrel. OPEC expects the U.S. release to swell a surplus in oil markets by 1.1 million barrels per day, BPD, a source from the group said.
Next, we have the top news in metal markets.
Restrictions on scrap metal imports into China, Malaysia and other countries present a golden opportunity for recyclers in India, an industry official said on Wednesday. The global scrap and waste handling industry has been in a state of disruption since 2017 when previous top scrap importer China announced a ban on most plastic, metal and paper scrap imports as part of a pollution crackdown. Malaysia then emerged as a top destination for the world's metal scrap and plastic waste, but it too recently raised purity thresholds on scrap imports that have left global metal recyclers reeling.
Nickel prices neared 7-year highs on Thursday and tin reached a record peak as low inventories pointed to tight supply while Chinese efforts to support its economy bolstered the demand outlook. Benchmark nickel on the London Metal Exchange, LME, was down 0.1% at $20,825 a ton in official trading after reaching $21,100, just below last month's high of $21,425. The metal used in stainless steel is up about 25% this year. LME tin was down 0.5% at $39,750 a ton, having touched its highest on record at $40,680. Used in solder for electronics, tin has almost doubled in price since the start of the year. We will now look at the top news in the agricultural sector. Supply chain snags are threatening to hamper deliveries of ethanol needed for blending with gasoline ahead of the Thanksgiving weekend, according to ethanol traders and producers. Unlike crude oil and other refined products, which can be transported by pipeline, ethanol is shipped primarily by train from various Corn Belt states to facilities where it is blended with gasoline. That makes the sector more vulnerable to labor shortages and other supply issues that is reducing the availability of rail cars and truck drivers, traders said. Ethanol is trading at approximately $2.20 per gallon, up more than 50% in the year to date.
That is all for today's news on commodity markets. Stay tuned to Trade Flow News as we continue to provide you with more updates. We also invite you to follow us on Twitter at Trade Flow News, which allows you to watch our program on your mobile device or desktop to receive information from there.